Hello students, once again I welcome you all to the second video lecturing session on financial markets and services. This is a subject which is kept for the final year BBA students, that is for the 5th semester BBA students of Bangalore North University and Bangalore University as well. So both the universities have got this subject in the syllabus. The title of the class is Financial Market. Subtitle is Players of Primary Market and Instruments in Primary Market. Players in primary market in the sense primary market ಅಲ್ಲಿ ಯಾರ್ಯಾರೆಲ್ಲ ಬರ್ತಾರೆ, who are all playing the role. So they may be persons or there may be institutions. Okay, the next concept is instruments in primary market. So whenever the companies float their financial instruments for the sake of capitalizing, so what kind of financial instruments are floated in the primary market is what exactly this concept is all about. So we move further. Quick recap on previous class. So in the previous class we had discussed about meaning of primary market and features of primary market. Then what is the meaning of primary market? So the primary market is the part of the capital market which is huge. You have to remember capital market consists both primary and secondary market. So the primary market is the part of capital market that deals with what? That deals with issuance and sale of the equity backed securities to investors directly by the issuer. It need not be always equity backed securities. They can also be preference shares or debentures. Okay. So that is the meaning of primary market. Then what are the features of primary market? We had discussed. So there were around 9 features of primary market. So few of them are like this. It is new issue market or fresh issue market. Issue is made directly to the investors. The company issues securities and collects money from the investors. The purpose of the primary issue is to, as we have discussed, it is either for setting of new business or for expanding the existing one or for the diversification of the business. So these are all some of the features of the primary market. So you can go back to the previous video and memorize all the features. So we will move on to the next slide. So learning objectives of this chapter we have already read out it in the previous session. We will continue to the session outcome. So students should know the players in primary market and instruments in it. So by the end of the session you should be able to clearly understand the players in the primary market and instruments that are dealt in it. So we move further. So the players can be broadly categorized into 3 groups. First group, they are issuers. Second group, of course, no doubt, they are investors. In between the issuers and investors, there is one more group called intermediaries. So this is the broad outline of the players of primary market. So first we look upon issuers. So there are 2 main types of issuers. So issuers are nothing but those who are in need of the capital, maybe companies, okay, they may be newly established ones or already existing businesses, so who float the financial instruments in the primary market. So they are the issuers. In these issuers we have got 2 groups. So they are corporates issues both debt and equity securities. They are pure corporates, private entities. Okay. Next group of issuers is government issues debt securities. So for the sake of government projects, long-term projects, so government also issues the debt securities. We can say that bonds. So government usually issues deep discount bonds, in the sense government issues the bonds at a price which is very lower than the face value of the bond and redeems it at the face value of the bond. Right? ಒಂದು ಬಾಂಡ್ ಬೆಲೆ 1 ಲಕ್ಷ ರೂಪಾಯಿ ಇದ್ದರೆ ಇನ್ವೆಸ್ಟರ್ಸ್ಗೆ ಅದನ್ನು ತಗೊಳ್ಳೋದಕ್ಕೆ 80,000 ರೂಪಾಯಿ ಕೊಡುತ್ತೆ. ಅಟ್ ದ ಟೈಮ್ ಆಫ್ ರೀಪೇಮೆಂಟ್ ಆಫ್ ದ ಬಾಂಡ್ ದ ಗೌರ್ಮೆಂಟ್ ವಿಲ್ ಪೇ ದೆಮ್ 1 lakh rupees. ಸೊ ದಿಸ್ ಇಸ್ ವಾಟ್ ಡೀಪ್ ಡಿಸ್ಕೌಂಟ್ ಬಾಂಡ್ಸ್ ಅಂತ ಹೇಳ್ತೀವಿ. ಸೊ ಗೌರ್ಮೆಂಟ್ ಯೂಶಲಿ ಆ ರೀತಿ ಡೆಟ್ ಸೆಕ್ಯೂರಿಟೀಸ್ನ ಫ್ಲೋಟ್ ಮಾಡುತ್ತೆ. And corporates, as usually, they float equity backed securities, preference shares and debentures. So In issuers, we have got two category. One of them is corporate issuers and government issues the debt securities. Then we move on to the next component. So investors. Who are the investors? Investors are those who respond to the issuers. So who are willing to invest their money in the instruments that are floated by the issuers in the primary market. So they are the investors. In this group, we have got again two broad categories, that is individual investors and corporate investors. When we speak on individual investors, it is nothing but general public. They can be households, employees, business persons, anybody. It is nothing but human being, general public. And we move on to the second point in the second sub point in the second main point. They are corporate investors. So corporate investors, they are not the persons, they are the artificial persons created by natural persons as we speak in accounts. So again in corporate investors, we have got two more categories, that is DIIs, nothing but domestic institutional investors. For example, LIC, that is Life Insurance Corporation of India, SBI Mutual Funds, SBI Pension Funds, UTI, that is Unit Trust of India. Then what is domestic? They are nothing but home country. It belongs to our country. Okay. Then foreign institutional investors. They are foreign institutions who are interested to invest in our country. Okay. So example is Franklin Templeton. So it is an abroad company for institutional investor. So in investors, we have got two main categories, that is individual investors and corporate investors. So individual investors are nothing but investors are nothing but general public, and corporate investors are again divided into two categories, domestic institutional investors and foreign institutional investors. Few of the examples quoted here. So we'll move on to the next slide. So intermediaries, who are they? So intermediaries bridge the gap between the issuers and investors. Not only bridging the gap between the issuers and investors, they also facilitate a lot of functions either on behalf of the issuers or on behalf of the investors. So out of all these investors, we go one by one. So SEBI as a regulator. So we look into SEBI. So SEBI is nothing but Securities and Exchange Board of India. It was established on April 12th, 1992 in accordance with the provisions of Securities and Exchange Board of India Act 1992. So it acts as a regulatory body. A few things that it demands to the companies are like this. It demands the companies to showcase whether their issue is public or whether their issue is private, like this. It mandates certain rules that the companies has to follow. So it provides some norms when the company is about to issue or float its financial securities. So it also gives the mandate for the capital structure, and it also asks the company its project's capital structure. So it regulates the companies and it regulates the even capital market also. So SEBI acts as a regulator. So it is established according to the Securities and Exchange Board of India Act. So there is a separate act has been passed in the Parliament of India in order to establish this regulatory body. Okay. So now we move on to the next point, that is merchant bankers and lead managers. Then who are they? What do they do? So under merchant bankers and lead managers, we have got few more participants. They are bankers to the issue, registrars to the issue and share transfer agents. So bankers and brokers to the issue, underwriters to shoulder the shortfall in the subscription, debenture trustees. So then we will look one by one who are they and what do they do. Bankers to the issue. So what they do is, bankers to the issue, as the name suggests, they carries out all the activities of ensuring that the funds are collected and transferred to the escrow account. Then what is escrow account? So escrow account is an agency account which is established by an agent or third party and holds the funds of the investor until the obligatories or the obligations of the both the parties, that is the issuer and the investors, whatever the agreement they have got in. Okay, so both the parties have to fulfill the agreement, that is the issuer has to issue the certificate. When does the issuer issue the share certificate, or it may be digital transfer of the shares? So he issues the share once the investor pays the money, required amount of money. So the escrow or third party ensures that both the parties exercise their obligation, then he discharges, then he transfers the escrow account money to the issuer. So this facility is done by the banker. So apart from this, bankers will also do many, so we'll see further. So then who are the next persons? Registrars to the issue and share transfer agents. Then who are they? What do they do? So registrars to the issue and share transfer agents are the intermediaries. They come in between the issuers and the investors. They collect the applications from the investors in respect of an issue, and they keep proper record of the applications and money received by the investors. ಸೊ ಯಾರ ಕಡೆಯಿಂದ ಎಷ್ಟು ದುಡ್ಡು ತೊಗೊಂಡಿದ್ದೀವಿ, ಅವ್ರಿಗೆ ಎಷ್ಟು ಶೇರ್ಸ್ನ ಅಲಾಟ್ ಮಾಡಬೇಕು, ಇದನ್ನೆಲ್ಲ ಒಂದು ಲೆಕ್ಕ ಇಟ್ಟಿರ್ತಾರೆ. And finalizing the list of the persons entitled to the allotment of securities, processing and dispatching the allotment letters, and refund orders or certificates and other related documents in respect of the issue. Refund ಯಾವಾಗ ಮಾಡಬೇಕಾಗತ್ತೆ? when there is an over subscription ಅಂತಂದರೆ ನಾವು ಇಶ್ಯೂ ಮಾಡಿರುವಂಥದ್ದು 10,000 ಶೇರ್ಸ್ ಆದರೆ ನಮಗೆ ಅಪ್ಲಿಕೇಶನ್ಸು 15,000 ಶೇರ್ಸ್ ಮೇಲೆ ಬಂದಿರುತ್ತೆ. ಎಷ್ಟು ಶೇರ್ಸ್ಗೆ ನಾವು ಅಲಾಟ್ ಮಾಡಬೇಕಾಗತ್ತೋ ಅಷ್ಟು ಶೇರ್ಸ್ ಮೇಲಿನ ಅಪ್ಲಿಕೇಶನ್ ಮನಿ ಇಟ್ಕೊಂಡು ಇನ್ನು ಮಿಕ್ಕಿದ್ದನ್ನು ನಾವು ವಾಪಸ್ ಕೊಡ್ತೀವಿ. ಡ್ಯೂರಿಂಗ್ ಸಚ್ ಸಿಚುವೇಶನ್ಸ್ ವಿ ಹ್ಯಾವ್ ಟು ರಿಪೇ ದ ಮನಿ. If we delay the repayment of the money, we have to pay them interest along with the principal. Or otherwise, sometimes what we can do is, in the sense, companies can do, in the sense, they can allot the shares based on pro rata. So they can retain the application money to the extent of 13,000 shares, and they can refund the rest of the money, that is on 2,000 shares. And the excess money received over and above the 10,000 shares as application money can be adjusted towards the further process. So this is what the refund process is all about. Next, brokers and bankers to the issue. Who are they and what do they do? So brokers advertise and they carry out the publicity in suitable media and plays a key role in promoting the public issue if it is a public. So brokers are persons mainly concerned with the procurement of the subscription to the issue from the prospective investors. They search the prospective investors who have got sufficient money, savings. They approach them, they motivate them to subscribe for the issue. So the appointment of brokers is nowhere compulsory, and the companies are free to appoint any number of brokers. So usually brokers are the feeders to the subscription. Okay, they approach the prospective investors and they motivate them to subscribe the issue. So they are bankers and brokers to the issue. Next, underwriters to shoulder the shortfall in the subscription. As the title itself says, so underwriters, what do they do? They shoulder the shortfall in the subscription. Suppose there is a concept called minimum subscription. If a company is issuing shares to the extent of 5 lakh rupees, there will be a norm. So according to the SEBI and regulatory bodies, there will be a norm that to what extent there should be a minimum subscription. So for example, we consider it as 3 lakh rupees. Compulsorily public has to subscribe the issue to the extent of 3 lakh rupees. Okay, or we consider entire 5 lakh as the subscription amount. So in this case, if it is 3 lakh, if the company has issued 5 lakh shares worth rupees 5 lakh, and there should be a minimum subscription of 3 lakh, only 2 lakh subscription has happened. Now the underwriters come into the picture on behalf of the individuals or public. They subscribe. Their underwriters are nothing but they are institutions, commercial institutions, who guarantee the shortfall of the subscription. Okay, so they do this facility. They take this responsibility for some commission. So underwriters are given some commission for facilitating the subscription of shortfall in the subscription. In a nutshell, so underwriters come and shoulder the shortfall. They bridge the gap between the actual subscription happened and the minimum subscription that is supposed to be happen. So they are the underwriters. Now comes debenture trustees. So debenture trustees play a key role, a crucial role in safeguarding the investors' money. So trustees were appointed to safeguard the interest of the debenture holders are called the debenture trustees. They are appointed well in advance by the issuer. Okay, so the debenture issuing company has to appoint the debenture trustees even before the issue of the debentures. They also can call for periodical report from the company. Who can call? The debenture trustees can call a periodical report from the company, inspection of the books of accounts, records, registration of the company and trust property. So this due diligence is taken care by the debenture trustees in order to ensure that the debentures money is not misappropriated or misutilized, and the entire money is being utilized for the said project. Okay, and exercise due diligence to ascertain the availability of the assets of the company by way of security as well as their adequacy. ಅಂತಂದರೆ ಡಿಬೆಂಚರ್ಸ್ ಏನು ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಮಾಡಿದ್ದಾರೆ ಕಂಪನಿಯಲ್ಲಿ, in case if the company fails to repay the debenture money, the debentures may have the claim over the assets of the company. ಆ ರೀತಿ ಕಂಪ್ನಿಲಿ ಅಸೆಟ್ಸ್ ಇದೆಯಾ ಇಲ್ವಾ ಅನ್ನೋವಂಥದ್ದನ್ನು ಡಿಬೆಂಚರ್ ಟ್ರಸ್ಟೀಸ್ ಏನು ಮಾಡ್ತಾರೆ, ಎನ್ಶೂರ್ ಮಾಡ್ತಾರೆ. ದೇ ವಿಲ್ ಆಡಿಟ್ ಆ್ಯಂಡ್ ಇನ್ಫಾರ್ಮ್ ದ ಸೆಬಿ ಇಮಿಡಿಯೇಟ್ಲಿ ಆಫ್ ಎನಿ ಬ್ರೀಚ್ ಆಫ್ ದ ಟ್ರಸ್ಟ್ ಡೀಡ್. ಸೊ ಇವರೇನಾದರೂ ಈ ಒಂದು ಪ್ರೋಸೆಸ್ಸಲ್ಲಿ ಡೀಡ್ಸ್ನ ಅಥವಾ ರೂಲ್ಸ್ ಏನಾದರೂ ಬ್ರೇಕ್ ಮಾಡಿದರೆ the debenture trustees will immediately inform it to the Securities and Exchange Board of India. So this is the task or job done by debenture trustees. The next player in the primary market is credit rating agency. For what? To rate credit worthiness of the company. Why it has to be rated in terms of credit worthiness? So IPO grading is the professional assessment of the credit rating agency, that is CRAs, on the fundamentals of the company. So the fundamentals should be very strong, otherwise the company will drain into the failure. So what are the norms laid down by the SEBI? It may be SEBI and other regulatory bodies. It has to be strictly adhering to the fundamental rules or the fundamental necessities. So it will quantify and qualify the fundamentals of the company. So it will qualify and quantify the company's fundamentals in relation to other listed equity shares in India. It is mandatory for the issuer company coming with the initial public offer. So it is mandatory for the companies which are offering IPOs to obtain IPO grading from a credit rating agency, and it has to be disclosed on the covering page of the document and application. We call it as prospectus. So the company has to disclose its ratings given by the credit rating agency on the prospectus. So this job is done by credit rating agencies. And the next player is depositories and depository participants. Who are they and what do they do? So depositories hold various forms of financial instruments in the form of electronic certification. So it may be shares, preference shares or debentures. So basically depositories hold various securities like shares, preference shares and debentures in electronic format, that is dematerialized format. Previously the companies used to give certificates. Now the era has been changed. The certification will be in the form of digital or dematerialized format. A depository participant is like an agent of these depositories. Investors open their account with the depositories via through depository participants. Investors do not directly deal with the depositories, they go with the depository participants. So it is mandatory for all the listed companies to have their securities admitted for dematerialization with both the depositories, that is CDSL and NSDL. CDSL is nothing but Central Depositories and Services Limited. NSDL is nothing but National Security Depository Limited. These are the two depositories that are working in India presently. So they are providing the depository services. What are they? They are NSDL and CSDL. So National Securities Depository Limited is NSDL and Central Depository Services Limited is CSDL. So these are the two depository service providers in India. So here we end with the half of the second session and we are left with another half of the second session. So the next concept is instruments that are floated in the primary market. So broadly we can categorize them into two groups. Shares is one group and debentures and bonds is another group. So now we'll look into shares. Okay. When we speak about shares, again we have got two categories of shares. So one is equity shares and another one is preference shares. First we'll know what exactly the equity shares are. So equity shares are those shares that form a company's permanent capital and enjoy some prioritized rights in the company's management, who also take risk and expect more returns. So we also call equity capital as eternal or permanent capital of the company. Okay, their return is never fixed, so they take some risk. Whenever the company incurs loss, that time they will not be having any dividends, and whenever company get some super profits, there is a chance to get high returns. So chances of not getting dividend is risk, and chances of getting more dividend is prospectiveness of the equity shares. So we have understood the meaning of the shares and equity shares. Now we will move on to the preference shares. So preference, the word itself, it says preference. So in what it is preferred, or in where the preferential right is given. So preference shares come next to the equity shareholders in the hierarchical order of the authority or participation in the management. Okay, so they enjoy preferential right over what? They enjoy the preferential right over the dividend. Hence they are called preferential shares. Otherwise, there is no other reason to call them preference shares. They do not get preference in the company's management, but they do get the preference in the dividends or company's earnings. Once the preference shareholders dividend is paid, then only the company will decide on the equity shareholders dividend. So preferential shares are further classified into four types. So we have mentioned here in the slide. So let us see one by one. So cumulative and non-cumulative. So both these put together, I have numbered it as 1, otherwise it will become 2. So as the word itself says, cumulative preference shares are those preference shares on which the arrears of the dividend get accumulated year by year. That is, on the incident of the loss of the company, if that company could not pay the dividend on preference shares or dividend to the preference shares in a particular year, and when the company gets profits in the next year, it has to pay the dividends, preference share dividend, for both the 2 years. So present year preference dividend and the previous year preference dividend, that is arrears of preference dividend. So in this background, they are called cumulative preference shares. Contrary to the first one, we have got non-cumulative preference shares. So these are the preference shares on which the previous year's arrears of preference dividend will not be given in the present year. So they are called non-cumulative preference shares. The second category of preference shares is redeemable and irredeemable preference shares. The word itself says that it is redeemable is nothing but repayable. So preference shares which are repayable over a period of time, they are called redeemable preference shares, and irredeemable preference shares are, they are perpetual preference shares. They are not repaid till the liquidation of the company or till the shutdown of the company. So they will be there in the company. So if they want to sell them, if the holders of the preference shares, irredeemable preference shares want to sell them, they have to sell it to the third party in the secondary market. Okay. Then convertible and non-convertible preference shares. Again, the word itself explains the gist of the classification of the preference shares. Convertible preference shares are those preference shares which can be converted into equity shares over a period of time, and opposite to it is non-convertible preference shares which cannot be converted into equity shares. They are called non-convertible preference shares. And the fourth category is participating or non-participating preference shares. So they are very close in the nature. So it is as plain as preference shares. The only speciality arises when a company has good profits. Even after deciding the dividend to the equity shareholders, if there is anything left out, then preference shareholders can participate in that company's revenue. Such preference shares can be called as uh, participative or participating preference shares, and those preference shares which cannot be participated in anything or residual profits after announcing the dividend to the equity shareholders. So such preference shares are called non-participating preference shares. So again we have got third main category of preference shares. So they are preference shares with warrants. So what are these? So preference shares with warrants are kind of preference shares that are attached with warrants, which gives the holder, that is the possessor of the preference shares with holder, gives the holder only the right but not an obligation to buy a number of underlying shares before expiry of a certain period. So these are preference shares with warrants which give the holder only the right to buy certain number of underlying shares but not an obligation to buy. Okay, these are called preference shares with warrants. So equity shares with detachable warrants are bundle of two products. So the beauty of this instrument is, so whenever the holder is not interested in holding the warrant, he can detach the warrant from the equity share and he can sell it in the market, and he can retain the equity share. So this is what the equity share with detachable warrant, which can be removed from the equity share. So whenever the instruments are issued, they are attached and issued. So on the will and wish of the holder, he can retain the equity share and he can sell out the warrant, and that it is nothing but detach. So in this background it is called equity shares with detachable warrants. And the next instrument is IDR, Indian Depository Receipt. Then what is this? So IDR is a financial instrument denominated in Indian rupees in the form of a depository receipt. ಅಂದರೆ ಭಾರತದ ಕಾಯಿನ್ ಅಂದರೆ ಭಾರತದ ರುಪಿ ರೀತಿಯಲ್ಲಿ ಅದನ್ನು ಡಿನೋಟ್ ಮಾಡಿರ್ತಾರೆ. ಸೊ ದ ಐಡಿಆರ್ ಈಸ್ ಸ್ಪೆಸಿಫಿಕ್ ಇಂಡಿಯನ್ ವರ್ಷನ್ ಆಫ್ ದ ಸಿಮಿಲರ್ ಗ್ಲೋಬಲ್ ಡಿಪಾಸಿಟರಿ ರಿಸೀಟ್. ಇಂಡಿಯಾದಲ್ಲಿ ಅದನ್ನು ಗ್ಲೋಬಲ್ ಡಿಪಾಸಿಟರಿ ರಿಸೀಟ್ ಅಂತ ಕನ್ಸಿಡರ್ ಮಾಡ್ಬೋದು. ಸೊ ಇಟ್ ಈಸ್ ಕನ್ಸಿಡರ್ಡ್ ಬೈ ಎ ಡೊಮೆಸ್ಟಿಕ್ ಇಟ್ ಈಸ್ ಕ್ರಿಯೇಟೆಡ್ ಬೈ ಎ ಡೊಮೆಸ್ಟಿಕ್ ಡಿಪಾಸಿಟರಿ. ಸೊ ಡೊಮೆಸ್ಟಿಕ್ ಯಾವುದು ಹೋಮ್ ಕಂಟ್ರಿ ಇರುತ್ತೋ, ಸೊ ಅದರಲ್ಲಿ ಯಾವುದು ಪರ್ಟಿಕ್ಯುಲರ್ ರೆಗ್ಯುಲೇಟರಿ ಬಾಡಿ ಇರುತ್ತೋ, ಸೊ ಅದನ್ನು ಕ್ರಿಯೇಟ್ ಮಾಡುತ್ತೆ. ಇನ್ ದ ಕಂಟೆಕ್ಸ್ಟ್ ಆಫ್ ಇಂಡಿಯಾ, ದ ಕಸ್ಟೋಡಿಯನ್ ಆಫ್ ದ ಸೆಕ್ಯೂರಿಟೀಸ್ ಈಸ್ ಸೆಕ್ಯೂರಿಟೀಸ್ ಆ್ಯಂಡ್ ಎಕ್ಸ್ಚೇಂಜ್ ಬೋರ್ಡ್ ಆಫ್ ಇಂಡಿಯಾ. ಸೊ ಇದನ್ನು ಕ್ರಿಯೇಟ್ ಮಾಡುತ್ತೆ, ಆ್ಯಂಡ್ ಇಟ್ ಈಸ್ ಕ್ರಿಯೇಟೆಡ್ ಅಗೇನ್ಸ್ಟ್ ದ ಅಂಡರ್ಲೈಯಿಂಗ್ ಈಕ್ವಿಟಿ ಆಫ್ ಇಶ್ಯೂಯಿಂಗ್ ಕಂಪನಿ. ಸೊ ಯಾವ ಕಂಪನಿ ಇಶ್ಯೂ ಮಾಡ್ತಿರತ್ತೋ ಅದರ ಫೇವರ್ ಆಗಿ ಮಾಡಿರುತ್ತೆ. ಏನಕ್ಕೆ? ಟು ಎನೇಬಲ್ ದ ಫಾರಿನ್ ಕಂಪನೀಸ್ ಟು ರೇಸ್ ಫಂಡ್ಸ್ ಫ್ರಮ್ ದ ಇಂಡಿಯನ್ ಸೆಕ್ಯೂರಿಟೀಸ್ ಮಾರ್ಕೆಟ್. ಇದರ ಅರ್ಥ ಇಷ್ಟೇ, ಫಾರಿನ್ ಕಂಪನೀಸು ಭಾರತದ ಪ್ರೈಮರಿ ಮಾರ್ಕೆಟಲ್ಲಿ ಫಂಡನ್ನು ರೈಸ್ ಮಾಡಬೇಕಾದ್ರೆ ದೇ ಕೆನ್ just coming to the primary Indian primary market and raise the funds. They have to go to the custodian of the securities, Indian securities market, that is capital market, and take some license kind of thing. ಅದರ ಜೊತೆ ಅದರಿಂದ ಅನುಮತಿ ಪಡೆದು ಬರಬೇಕಾಗತ್ತೆ. ಸೊ ಅದನ್ನ ಎನೇಬಲ್ ಮಾಡುವಂಥದ್ದೇ IDR. ಸೊ the foreign company IDRs will deposit shares to an Indian depository. ಅಂತಂದರೆ ಫಾರಿನ್ ಕಂಪನಿ ಶೇರ್ಸು ಇಂಡಿಯನ್ ಸೆಕ್ಯೂರಿಟಿ ಮಾರ್ಕೆಟ್ ಏನಿದೆ ಅದರ ಕಸ್ಟೋಡಿಯನ್ ಹತ್ರ ಬರ್ತಾರೆ, ಅದರ ಹತ್ರ ಒಂದು ಲೈಸೆನ್ಸ್ ಅಂತ ತಗೋತಾರೆ. ಇದನ್ನು ಮತ್ತೆ ಫಾರಿನ್ ಕಂಪ್ನೀಸ್ ಏನು ಮಾಡ್ತಾರೆ ಅಂತಂದರೆ ಇಂಡಿಯನ್ ಡಿಪಾಸಿಟ್ರೀಸಲ್ಲಿ ಡಿಪಾಸಿಟ್ ಮಾಡ್ತಾರೆ. ದ ಡಿಪಾಸಿಟ್ರಿ ವುಡ್ ಇಶ್ಯೂ ರಿಸಿಪ್ಟ್ಸ್ ಟು ಇಂಡಿಯನ್ ಇನ್ವೆಸ್ಟರ್ಸ್ ಅಗೇನ್ಸ್ಟ್ ದೀಸ್ ಶೇರ್ಸ್. ಸೊ ಇಟ್ ಈಸ್ ದ ಪ್ರೋಸೆಸ್ ಆಫ್ ಇಂಡಿಯನ್ ಇನ್ವೆಸ್ಟರ್ಸ್ ಇನ್ವೆಸ್ಟಿಂಗ್ ಇನ್ ಫಾರಿನ್ ಕಂಟ್ರಿ ಶೇರ್ಸ್. ಇದರ ಒಳ ಅರ್ಥ ಇಷ್ಟೇ. ಸೊ ಫಾರಿನ್ ಕಂಪನೀಸ್ issue their shares to the custodian of the Indian securities market, that is Securities and Exchange Board of India. It approves, then the foreign company will deposit these IDRs in the depositories of Indian share market. Then Indian investors can go and buy these share in IDRs. So this is the process of domestic residents investing in the foreign country companies. Okay. Next we go to the GDRs, that is Global Depository Receipts. A Global Depository Receipt, GDR, is a bank certificate issued in more than one country for shares in a foreign company. IDR ಅಂತಂದ್ರೆ Indian Depository Receipt ಅಂತಂದ್ರೆ it is a limited edition of GDR. GDR ಅಂತಂದ್ರೆ it will be given GDRs can be traded in more than one country, two country, three country. So IDR is a limited version of GDR. GDR can be, it is similar to the IDR, but its scope is more. GDRs can be traded, or the different countries investors can invest in a particular foreign country's shares. So that is GDRs. Suppose example ಅಂತಂದ್ರೆ ಅಮೇರಿಕನ್ ಕಂಪನಿ ಒಂದು GDR ಸರ್ಟಿಫಿಕೇಟ್ನ ಮಾಡಿಸಿದೆ ಅಂತಂತಂದರೆ, ಸೊ ಆ ಅಮೇರಿಕನ್ ಕಂಪನಿ ಶೇರ್ಸ್ನ ಇಂಡಿಯಾದಲ್ಲಿ ಅಥವಾ ನಮ್ಮ ಸುತ್ತಮುತ್ತಲಿನ ಏಷ್ಯಾ ಕಂಟ್ರೀಸಲ್ಲಿ ಅಥವಾ ಯಾವ್ಯಾವ ಕಂಟ್ರೀಸ್ಗೆ ಅಂತ ಅದು GDR, ಯಾವ್ಯಾವ ಕಂಟ್ರಿಗಳ ಸೆಕ್ಯೂರಿಟೀಸ್ದು ಕಸ್ಟೋಡಿಯನ್ ಏಜೆಂಟ್ ಇರುತ್ತೋ ಅದ್ರ ಹತ್ರ ಪರ್ಮಿಷನ್ ತಗೊಂಡು ಆ GDRನ ಮಾಡಿರ್ತಾರೋ, ಸೊ ಆ ಎಲ್ಲ ದೇಶಗಳ ಇನ್ವೆಸ್ಟರ್ಸು ಅಮೇರಿಕನ್ GDRನ ಏನು ಮಾಡ್ಬೋದು, ಅದರಲ್ಲಿ ಇನ್ವೆಸ್ಟ್ಮೆಂಟ್ ಮಾಡ್ಬೋದು. ಸೊ ದಿಸ್ ಈಸ್ ದ gist of the GDR and ADR. So now we will move on to the debentures and bonds part. So it is very simple. So secured, the title word of the statement gives the meaning. So secured mortgage debentures, secured or mortgage debentures. So these are the debentures which are backed up by the assets of the company. ನಾಳೆ ಬೆಳಗ್ಗೆ ಏನಾದರೂ ಕಂಪನಿ ಲಾಸ್ ಆಯಿತು, ಇನ್ನೊಂದಾಯಿತು, ಮತ್ತೊಂದಾಯಿತು ಅಂತಂದರೆ the debenture holders are secured, their money is secured by the assets of the company. So they are called secured and mortgage debentures. The opposite to it is unsecured or naked debentures. ಅಂತಂದರೆ whenever company goes loss, whenever the company incurs loss or ಅದನ್ನು ಮುಚ್ಚಬೇಕಾದಂಥ ಪರಿಸ್ಥಿತಿ ಬಂದಾಗ, ಸೊ ಆ ಡಿಬೆಂಚರ್ಸು ಕಂಪ್ನಿ ಅಸೆಟ್ಸ್ ಮೇಲೆ ಓನರ್ಶಿಪ್ನ ಕ್ಲೈಮ್ ಮಾಡೋ ಹಾಗಿಲ್ಲ. ಸೊ unsecured debentures or naked debentures are more risky than secured debentures. ರಿಸ್ಕ್ ಜಾಸ್ತಿ ಇದ್ದಾಗ ಆಬ್ವಿಯಸ್ಲಿ ಏನಿರುತ್ತೆ, ರಿಟರ್ನ್ಸ್ ಜಾಸ್ತಿ ಇರುತ್ತೆ. ಸೊ ಸೆಕ್ಯೂರ್ಡ್ ಡಿಬೆಂಚರ್ಸ್ ಕೊಡುವಂಥ ಇಂಟ್ರೆಸ್ಟ್ ರೇಟ್ ಒಂಚೂರು ಕಡಿಮೆ ಇರುತ್ತೆ. ಅನ್ಸೆಕ್ಯೂರ್ಡ್ ಡಿಬೆಂಚರ್ಸ್ ಅಥವಾ ನೇಕೆಡ್ ಡಿಬೆಂಚರ್ಸ್ ಕೊಡುವಂಥ ಇಂಟ್ರೆಸ್ಟ್ ರೇಟ್ ಒಂಚೂರು ಕಡಿಮೆ ಇರುತ್ತೆ. ನೆಕ್ಸ್ಟ್, ನಾನ್ ಕನ್ವರ್ಟಬಲ್ ಡಿಬೆಂಚರ್ಸ್. ಸೊ ದೀಸ್ ಆರ್ ದ ಡಿಬೆಂಚರ್ಸ್ which cannot be converted into either preference shares or equity shares over a period of time. We call it as non-convertible, and opposite to it is fully convertible debentures. So these are the debentures which can be converted either into preference shares or into equity shares as per the terms and conditions of the issue. They are called fully convertible debentures. And partly convertible debentures are those only part of the debentures held can be converted into either preference shares or equity shares. They are called partly convertible debentures. And zero interest debentures, they are also called deep discount debentures or bonds also we call it if it is issued by government. So these are the debentures on which the issue price is less than, very less than the redemption price, face value. So for example, I have explained to you in the previous point also, the value of a particular debenture will be 10,000. At the time of issue, it will money will be the investor has to pay only 80,000. At the time of redeeming the same debenture to the investors, company will pay 1 lakh rupees. So this we call it as deep discount or zero interest debentures, because no interest is paid periodically to the investor. Next, floating rate debentures. So these are the debentures on which rate of interest is not fixed and it is floating or flexible. So they are called floating rate debentures. So these are the instruments that are floated in primary market. So that we broadly classify into two categories. They are shares. Another category is debentures. Again, shares are further divided into equity and preference. And apart from shares and preferences, we have got a few more things: IDRs and GDRs. And under debenture sets, we got secured, unsecured kind of things. So we move to the further slides. We have got multiple choice questions in order to know how far you have understood the concept. So there is a question on expand SEBI. So the options we have got is Securities Exchange Board of India, Share Exchange Board of India, Supreme Exchange Board of India, Standard Exchange Board of India. So the answer is Securities Exchange Board of India. It is not securities, Securities and Exchange Board of India. It should be. The right answer is Securities and Exchange Board of India. Now we move on to the second question. Underwriters dash the under subscription. So the options we have got is advertise the under subscription, promote the under subscription, convert shares to debentures, guarantee to subscribe the shortfall of the subscription. So right answer is, so underwriters guarantee to subscribe the shortfall of the subscription. So for this purpose they are paid some commission, underwriting commission. Next, expand FIIs, foreign international investors, foreign institutional investors, foreign Indian investors, none of the above. The right answer is foreign institutional investors. Next question, can shares be converted to debentures? The option we have, it is a closed-ended question. The answer is no, shares cannot be converted into debentures. Next question is, can debentures be converted into shares? The answers yes or no. It is yes, of course. Debentures can be converted into either preference or equity shares as per the terms of the issue. It can be converted. So this is the input courtesy, the material which I have referred to develop this content. Thank you. We'll see you in the next session.